So we've told you about San Jose, DC, Boston, but enough of them. Let's talk about some smaller markets. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons, and I'm joined today with Greg Willett, the Vice President of Research and Analysis at NPF Research. And Greg, today we're talking about some secondary markets with fewer than 100,000 apartment units that have seen significant revenue growth so far in 2010. And let's put a list up on the screen for you. Here are the top 6 small secondary markets for revenue growth so far this year. You see El Paso topping the list at more than 11%, followed by the Greenville, Spartanburg, Anderson, South Carolina area close to 10% revenue growth, and then Birmingham, Oklahoma City, the Greensboro, Winston-Salem area, and Hartford, Connecticut. And we've told you about El Paso, we've told you about the Carolina markets in some videos prior, so you could find those in our archives. So today we're going to focus on those other 3 markets. And Greg, let's start with Birmingham. What's going on in Birmingham to make it stand out on this list?
Birmingham is an interesting one, Jay, and it really reflects what's happening in the economy. Since the job count bottomed at the beginning of the year, Birmingham has gained about 6,000 jobs. That's growth of 1.3%. Pretty broad-based, a little bit of growth in every single industry, none really cutting at this point. And what you see in the apartment market, it's the same sort of results. Occupancy up pretty much everywhere in terms of every product category, every neighborhood. Same with rents. There is one laggard there, which would be the North Birmingham, Bessemer area. In that area, the occupancy increase has been a little bit more sluggish, and in turn, they're still cutting rents in that one.
And Greg, let's move a little further west. Oklahoma City. What's going on there?
Oklahoma City, the job story is really the big news in Oklahoma City. 17,000 jobs produced since the beginning of the year. That's a pretty robust 3% growth rate. A lot of the growth is tied to the oil and gas industry. Some big increase in their mining employment category, which would be the actual oil and gas extraction, and some related industries like construction and professional business services all going up. So what we're seeing then, some good growth in occupancy and rents pretty much, again, across the spectrum in each age category and neighborhood. As in Birmingham, there is one outlier there, which would be the urban core in Oklahoma City, the in-town, Bricktown submarket. Occupancy coming up a little bit there, but again, they are cutting rents in that neighborhood. So a little trade-off, buying some occupancy.
And now let's fly way up to the northeast, Hartford, Connecticut. Greg, what are you seeing in Hartford?
Hartford, again, let's go back to the jobs. You've got about 11,000 positions created thus far this year in Hartford, so some pretty decent growth there. Recovery in occupancy and rents in most areas, but you do again have some slower areas there, and that would include the urban core within Hartford, where the increase is there, but is just much smaller than it is in some of the suburbs, and also the East Hartford area, which is actually one of their bigger suburbs. And the job gain is really kind of playing out by what's happening on the neighborhood level. You have some categories that are having some pretty big growth in Hartford, and others that are actually losing significant numbers of jobs still.
And Greg, one last question for you. These markets aren't markets we traditionally know of as for major revenue growth. So going forward, could these markets keep it up?
You know, as we talk about the bigger markets, one thing we always focus on in the demand is that they are getting some bounce back of renters from shadow market product that are coming into the traditional apartment communities. You really don't have much shadow market in these smaller metros, so that's not much of a factor. On these, it really comes down to what is that job gain number going to be as we move ahead.
So that's what's to look for. And that wraps us up for Apartment Market Dynamics. So until next time, for Greg Willett and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.